you'll be able to see the next screen. Let's see if our votes are starting to roll in. Yep, they're starting to roll in. We've got some folks that already have the blueprint. Would like to know about the benefits of fission, which we're adding to. We have a number of folks asking what is radioactive trading? What's this all about? Well, I'll tell you. Radioactive trading is about it began because I went broke. It began because I actually was following directions. All I did was I went to one of these weekend seminars where they teach you some options strategies and covered calls trading, and I was doing really well for a number of months. And then in one single trade, my account was almost completely cleaned out, and I realized that that money went somewhere. Somebody was enjoying it. It went somewhere. But it didn't necessarily remain with me, and I figured that, geez, there must be a way to protect that from happening, and I was really excited because of some of the good things that I had seen with my trading, and I guess I just wanted to learn how to not participate in the downside. Participate in the upside, but not in the downside. Okay? All right, Mike, we've still had a number of folks come in. But I'm going to go ahead and close the poll and share the results, okay? All right, can you see those up there? I've got to ask Mike because I can't see both screens.
Yep, we're all good.
Okay, very good. So about a fifth of us, 19%, are saying what's radioactive trading? Radioactive trading is a style of trading that begins with risk management, okay? It begins with risk management, staying out of trouble in the first place. After that, it's possible to go on to virtually unlimited gains, but at the outset, we want to control our risk and do it by way of really reliable means, not just a trailing stop-loss order, for example. Okay, 20% have read the sketch. Very good. That's one of our free materials. If you do not have the sketch, it's kind of a mini blueprint. The sketch shows the initial setup of what I call a radioactive profit machine, which is, simply put, it's a variation on the traditional married put strategy. It has two distinct elements that are different from the traditional married put, but we're going to be discussing that and showing a number of them in this presentation. Okay, so some folks have read the sketch and they know about the radioactive profit machine and also income method number 1, which is selling a covered call. Nothing wrong with covered calls except for what's wrong with them. And we actually get out of both of the two biggest problems that selling covered calls do. Okay, 23% are thinking about getting the blueprint. That's wonderful. I'm going to recommend that you do so. We have a special today, kind of an end of the quarter special that I'm going to mention right as we wind up the presentation. Today we are going to be talking about some products for sale, okay? But out of the 90 minutes of this presentation, I'll tell you that 85 minutes of it is pure going to benefit you. This is how to make money type trading advice and strategies, okay? So you're going to want to stay on. We're also going to show everything that we promised in our most recent email. Okay, 20% already have the blueprint. That's marvelous. And 9% say radioactive trading is better than cheese in a can. When's the next seminar? Well, that's super. Tentatively, our next seminar will be May 15th and 16th. We will have a calendar up probably within the next few weeks for the 2009 seminar schedule. And we'll be doing venues such as Las Vegas and California, Texas, Florida. We're looking to put together some real good seminars in your area, okay? And if you're outside the United States, write us. We'd like to know where the greatest demand is and start working towards that, okay? All right, I'm going to hide the results, and we'll move on here. Radioactive trading exists to help people stop losing money. That's where it begins. That's the first purpose of trading radioactively, is to stop losing. And if you've ever, I don't know if you follow Warren Buffett, Mike, but do you know what his number 1 rule for winning is?
No, I don't actually, Kurt.
Okay, I'll go ahead and tell it to you. Don't lose.
Don't lose. Okay.
That's his number one rule for winning is don't lose. And essentially that means don't do the things that open you up to big losses. Okay. At the same time, position yourself for very good gains. And the way that he does it is different than the way that you and I can do it. Okay. Warren Buffett has billions of dollars at his disposal and incredible information, and I'm sure quite a bit of inside information. He's able to purchase companies when they're undervalued, okay? And that's his big claim to fame. We're going to do something similar. We're going to purchase companies, but we're going to stay insured. We're going to use stock insurance, okay? And we make money by way of what I call proper position sizing, which we'll show today, insurance, insuring our positions with put options, and taking money out by way of, now there's 9 different income methods. Okay, and the income methods are essentially they're adjustments to your initial radioactive profit machine, so that it lessens even the small amount of risk that you started with, or it captures a little bit of extra upside. Okay, that's what radioactive trading is all about. Is radioactive trading right for you? Well, I don't know. If all you want is to have your risk managed, why then I'd recommend keeping your money in the bank, okay, or T-bills, or bury it in your backyard, put it into gold or something. But if you want to have your risk managed and be positioned so that you can take advantage of the opportunities that there are in the marketplace for growth, I think radioactive trading is the only way to go. Okay, and of course it also provides for current income. If you want to be able to take money out now, then radioactive trading setup is the best way to go. Okay? All right. So first of all, what is a radioactive profit machine? Here's an actual trade that I did here in 2007. I picked up STP, 100 shares. Actually, I picked up 200 shares, but it's simpler to show it in this format. Okay? So 100 shares at $39.99 is about $4,000, right? Then I did something a little bit different there, Mike. What's the next line all about?
Well, it looks like then you bought a in the money, $45 put for about $8.10 per contract. So you would have put in another $810.
Yeah, that's $810 for every 100 shares of stock that I own.
That's right.
Okay, and like I said, I did this on 200 shares. So essentially what I've done here is I've made an investment of $48.09 a share, or $9,618, okay, on 200 shares. But I'm guaranteed to get some of it back. In fact, what I'm guaranteed back is $45 per share. Okay. Now, there where it says guaranteed return, that might seem a little misleading. What that means is it's a guaranteed price. Okay. I'm guaranteed that I'm going to have returned to me $45 of that $48.09. Okay. So what's at risk? Well, it's the difference. The difference is $3.09 a share, or as a percent of the total position, 6.42%. Okay, so I have 6.42% at risk. This was on October 10th. Okay, and by just a few days later, okay, I was able to sell November $60 calls for $3.10. Now, what's my new situation here, Mike? I have $3.09 at risk, but I've taken some income of $3.10. What's going on now?
Well, you're essentially what we like to call bulletproof on that position. You've paid for your initial at-risk amount, and you are no longer at risk of losing any of the money that you originally put in.
Right. I'd like to point out that I sold a $60 call, not a $40 call, not a $10 call. Okay. It's really important that I sold a call that's at or above this put strike price. Okay. But what happened? This is what I call income method number 1, selling a covered call. What happened with this trade eventually is that I applied a couple of other income methods, and I ended up with a 43% return in 89 days. Okay, 43% return, 89 days. Okay, now I'm not going to say that that's something I do all the time, but it is something that I do often, and the reason that I'm able to do it is because I haven't lost too much money on the bad trades, okay? And, for example, if I had lost on this, what's the most I could have lost there, Mike?
Originally, it was only 309, or what is that, 6%, 6.4%?
Yeah. That's the maximum that I ever could have lost at any point. And then after bulletproofing, why then I can't lose anything. And
Right.
of course, there's 8 other income methods that can be applied. Okay? All right.